Welcome back to Mantle Mondays. My name is Amar Varma. I'm the co-founder and CEO of Mantle. Today I'm joined by an extraordinary guest, Rebecca Skvorc. Rebecca, I kind of feel like you have the tag as scale-up specialist. You've been the financial architect of some of the most impressive tech stories regionally here that we've been through, including Wave, Nudge. You're currently the CFO now at ODAIA. We're helping navigate massive growth spurt in the AI for life sciences space. Welcome. It's great to have you on.
Really appreciate you having me here. Thanks, Summer.
All right, let's just dive right into it. We have the journey from the big banks to the big exits. We have a lot to discuss here. But before we dive in, I always want to kind of give the teams a chance to kind of voice what they're doing, what's special, what's exciting, and we'll get into it here. You've seen the inside from Goldman Sachs to these startups. Last decade, you've really been in this high growth sector. Maybe give us background on who you are, kind of what shaped you and how you ended up here today.
Sure, of course. So I have been in finance now for about 25 years, half that time in public companies and then half that time in tech. Honestly, my trajectory into tech is a little bit different, and it wasn't really intentional. When I graduated in 01, nobody was going into tech. This is when the dot-com bubble burst. So I spent the first 12, 13 years of my career in public companies, enjoying it, learning what great looks like. I worked for some of the best. I worked for Goldman. I worked for the Royal Bank of Scotland. I worked for Rogers, KPMG. And then I had a partner at KPMG who reached out to me and said that he thought that I'd be interested in the tech space. And that was in 2013. And I've honestly never looked back. Scaling companies, helping founders scale their companies is incredibly rewarding and energizing. And I recommend it for most people who are okay with a little bit of chaos, a little bit of scrappy, and who love to build. If you love to build, it's the place to be.
Love it. That's quite the background. I think there's a lot in there. We can unpack some of it. Maybe give folks a quick on what the company you're at today, ODAIA, is doing and why it's such an exciting opportunity.
Sure. So ODAIA is AI first technology in the commercial life sciences space. And at a high level, what we do is we help the commercial teams figure out which healthcare professional their field force and or digital teams should go after from a messaging perspective. We help them prioritize who they should talk to, what they should talk to them about. And we can ingest all kinds of data. So from claims data to lab data to CRM data, market access data. It can be in raw form. It can be messy, and we clean it and run it through our AI engines, and we spit out a product that drives real results, which is one of the things that I'm the most excited about. We drive real outcomes. And as we all know, in the AI world these days, outcomes is one of the most important things. So I love the fact that we drive real value. I had a conversation with one of our customers' CFOs in the US, a top 20 pharma company. And what he said to me was that he thinks of ODAIA as driving 7% top line lift in perpetuity, which, as you can imagine, as a CFO, I find incredibly powerful.
Well, what's super interesting is you also talk about the numbers, and 7% of a large number is a large number. But maybe also talk a bit about the mission, because I think the mission is super key here.
Yeah. So the mission for ODAIA is we improve patients' time to therapy, which is really powerful. And we were just talking actually over the weekend about one of the products that we're supporting that is launching in the coming few months. One of our larger customers will actually help cure the disease, which is wild. And so as a launch drug, we have the ability to ensure that it gets into the hands of the right healthcare professional before they might have otherwise even known that it existed.
Wow, that's a really powerful statement. Thank you. Let's kind of get to some of the meat of some of the stuff you built in there. One of the things that keeps me up is seeing founders build billion-dollar rocket ships on a $10 foundation. The wait until the term sheet is signed to think about their data room, their unit economics, their structure. And then for the rest of the life cycle, they're playing defense to undo a lot of the decisions they thought were simple and correct. You're big on the CFO as a strategic partner. Maybe dive into that on some of the lessons some of the early stage folks can think about so that when they finally get the privilege of working with somebody like you, they'll be in a much better spot.
Yeah, that's a fair point. There are some things that I've unwound, and you do end up doing that. I do believe that finance is a strategic business partner. So I think of it in two ways. Accounting is the history and finance is the future. And I spend a lot of my time trying to think about the future rather than the history. But you have to have a really good foundation on which to build the future. And so there are a couple of things there. So to your point, most early stage founders don't have the ability to hire someone who is a senior or experienced finance professional. So what do you do? So I think that you do one of three things. One is you can work with professional services firms who are well versed in tech. And I'm a really big advocate for finding professional services firms who actually have a tech background and a tech practice, because they have literally seen all the problems and all the things that you're going through as a founder, and they can help you. I think that's really important. That's part one.
I'll just interject there. I find a lot of times, especially in the last few years, everybody's like, oh, I just did it, or I hired a friend, or I used, one of the LLM models to navigate me through something. And I'm like, you might have the right outcome, but you're missing a lot of the context generally. And the context matters in this case. And that's been one of the key pieces I've just flagged for people as well.
So actually, it's funny you say that. So I was going to say that there are a lot of blogs out there, and there's a lot of great content. There was not when I started 13 years ago in tech. I had just figured it out. There's a lot of good content out there. I'm a big fan of LLMs and leveraging LLMs, but if you don't ask it the right question, it will give you the wrong answer. So that comes back to sometimes where you do need to leverage a professional services firm to help you navigate, to make sure that you don't make the wrong decision. And that is, again, or you have like a fractional CFO that maybe you work with that helps you interpret the result that you got out of the LLM, and you can bounce it off them, because you may not know what kind of context to provide to the LLM so that it gives you the right result. Context is incredibly important. The third piece, I think, that when you're an early stage founder, to make sure that you have the right foundation, is actually to leverage software that is out there that can help you build the right foundation right from the get-go. There's a lot of things that you don't have to do now that you used to have to do on your own that you can now leverage software to do. And actually, Mantle's a really good example. Whether it's building your cap table, getting documents signed, or issuing your first safe.
Amazing. Yeah. Well, appreciate that. You've been incredibly helpful as beyond just being a customer to us and giving us feedback. So thank you for that. We'll get into some more of those details here. Let's go kind of building one up from the working strategically with somebody as a founder. The bank, the business is rolling. The metrics the company uses are increasing up to the right. The shape of the chart goes from, the squiggly line to something that's definitively in a, top to the right angle or slope of the curve. And then it starts to really steepen. What are some of the things that you've seen people do that were exceptionally clever, and then some of the mistakes in that era? Because I think that's really the make or break for most people in these businesses, is if they can get there.
Interesting. So a couple things. One is, as you and I both know, it isn't always up to the right. If some founders listening to this and it's not up to the right, that also happens. But to your point, once it starts heading up to the right, what are the types of things you can focus on? A couple of things is it's not like the only metric is your ARR. So there's a metric component and there's a people component of it as well. ARR is one metric, but if you have terrible customer retention, then you're filling an empty bucket. And that's a problem you need to solve. So whether it's net revenue retention or gross revenue retention, incredibly important and powerful to look at. If you've got a business that has thousands of customers, cohorting your customers is actually a really good way to look at what's going on and what maybe you released that wasn't good. If you've got enterprise customers, it is interesting to see what kind of products that they're adopting along the way.
Super helpful. Yeah, I think the empty bucket, growth is good on the top line. Churn is generally an indication something's not right. that's just going to fall off. So I think those are some of the interesting things. Actually, let's just dig in on that, because you're a bit of an expert here. When people talk about these metrics, ARR, CARR, NRR, maybe just break down some of the nomenclature for people and definitions of how you see it and how you see it, from the leaky bucket, empty bucket, full bucket, whatever the analogy is.
Okay, so to your point, let's just back up what those metrics mean. So ARR, annualized recurring revenue. A lot of people think of monthly recurring revenue, and that works too. Essentially, you take today's revenue or contracted revenue and you multiply it by 12. CARR is a little bit confusing, but essentially what that means is you might have a customer where you've signed on to provide a service, but it's not for 3 months. So it's contracted or committed. And so that's CARR, but it is not yet ARR. The other thing that I think is confusing is when people think of ARR, what I've seen people do before is they'll say, well, I've got the customer committed and they're going to spend $450,000 over the next 18 months. Is that my ARR? And so then I focus on the letter A, which means annual, and it's annualized. So likely the ARR for that customer is 300,000, not 450. These are big numbers, obviously, but you can do the same thing, divide that by 10 if your customers are smaller. Just keep in mind that just because the customer is committed for a longer period of time doesn't mean that that improves your ARR. There's another metric that is TCV, total contract value. That's a great metric to measure if you've got a business that is a longer term. If you've got longer term committed contracts, you've got 3-year deals, 2-year deals. When you're talking to investors, talk about your TCV, your total committed contract value.
Right. Yes, I think that's really helpful nomenclature for the top line. Now, what are some of the details underneath that people usually, in hindsight go, oh, I wish I looked at that closer, retention and some of the other ones.
So, and gross margin, I actually think I should talk about a little bit as well, just to get really nerdy. Only because it matters about how you think about whether or not your business can scale. So when I think about ARR and its impact on customer retention, so net revenue retention is when you think about $1 of business that you had at the beginning of the year, do you still have that $1 of business at the end of the year? And did you add more or did you contract? So if you had a $100 customer at the start of the year and at the end of the year, that customer is $120, that's $120 net revenue retention. And so I think of NRR, I'm in an enterprise SaaS business, so I think of it on an annual basis. You can think of it in a shorter time span, like a quarter. And alternatively, if that business left you, then you went from 100 to 0. And what you do is you take a look at that same group of customers at the beginning of the year, look to see whether or not they're still there at the end of the year. And that's your percentage. That's your net revenue retention. Gross revenue retention is similar. You just don't get to count any kind of expansion. And people love to try to wrap that in there, but it doesn't count.
Very cool. Let's slip into Mantle. You talked a bit about some of the pieces of software. What are some of the must pieces of software that you have at your scale, and that you're like, could probably have used them earlier?
Mantle for early stage founders, honestly, transparently, is a really good one. I think that cap tables are incredibly complex. I think they are hard to understand. And I think that platforms like Mantle make that incredibly easy. It's actually one of the things that I found the hardest to understand when I first joined, and there were no blogs out there for me to leverage. And a lot of the information that's out there honestly isn't right. So be careful using LLMs when you are talking about anything to do with cap tables. Sometimes it gets the jurisdiction wrong, or it's looking at Canada versus the US or vice versa. So I'd be really careful. I think it is really smart to use a platform like Mantle for early stage businesses. The other thing not to use spreadsheets for is just back office accounting type things. That's, I think, pretty self-explanatory. You can use software. You don't have to go overly complex. Wave if you're really micro small. If you're a startup, I would use something like a QuickBooks or a Xero. They're pretty easy to use. And then having a fractional CFO or similar to help you through that, or once you get to a point you've got someone you can bring in-house like a director of finance, I think that that's incredibly helpful as well. And then in terms of other software, if you've got people that are traveling, use Float. Float is great. One of the hardest things for early stage founders is that you have to use your personal credit to get a credit card. Float allows you not to have to do that.
Yep. We're Float customers. We've been incredibly happy with the
so are
service.
we. Float is great. So any kind of travel management, any kind of something like an OCR where it reads your invoice as you send it through, because the last thing you want to do as a founder is admin. So the faster that you can leverage early stage software to not have to do the things that you probably don't enjoy doing, I would strongly recommend. Those are just a couple of examples.
You've had some other interesting roles through the journey here. I believe at Nudge you were not just the CFO, but you were also running talent. And maybe just describe how that came about, because generally those are not conflicting, but have opposing views. One wants to make sure that we're placing the right bets, and one's like, I just want to get all the people in, right? So maybe just discuss that a bit, how that came about and what it was.
So I did. That's right. I did wear two hats. I do think of it as two hats, but I don't necessarily think that they're conflicting. So I've currently got a fabulous business partner at ODAIA, so I don't have to do both roles, which is amazing, and I'm very grateful for her. But when I was at Nudge, I wore both hats, and I don't actually think of them as truly conflicting. In my mind, your biggest asset at a company, at any company, especially tech company, is your people. So if I'm the finance person, my job is to optimize assets and my biggest asset is my people, then that is truly a significant portion of my job. And the way that I think about optimizing assets when those assets are people is it's a couple of ways. One, you want people to want to come to work every day. If you only have 10 people in your company, one of the most important things is that instead of them acting like 7-person FTEs instead of the 10, kind of want them to act like a 13-person FTE company or a 15-person FTE company. And the best way to do that is to make them want to be there. And so you do that through a couple ways. One is if you hire great people with great talent, often they want to work together and they like working with each other. I think that's really powerful. Find them hard problems to solve. Certain kinds of people love solving hard problems. And then if you can make your business mission driven, then people feel like they're solving a problem that they're truly excited about solving and they want to come to work every day to do it. So it's sort of like, how do you take your 1 FTE and turn that into a 1.5? And I think that's a very personal founder. I'm sure you've been through this yourself, Amar, and thinking through this.
I love the analogy of, you know, sometimes sports isn't the right one, but like play bigger than you are, right? And it's like,
Yes.
put yourself in the game and then, build with people like yourself, whatever that looks like, early on to get that cumulative group working at a higher geared ratio. What's interesting to me is through your journey, you've done stuff at some really great companies along the way, Nudge, Wave, and others. And post COVID, I think there's been a very interesting take on this. Some folks still not back in the office. Sometimes, everybody's got their own setup. Building the culture of this stuff's been incredibly hard and is kind of the magic sauce through the years. What's some of the stuff that you've done? Because I've watched the work and I'm just witnessing some of the magic. Maybe share some insights on that.
It's hard. First of all, I'd say it's hard. I would say that I was at Nudge during that transition. And one of the things that the founder and I talked about was that while we were all remote, we were still borrowing from the culture bucket that we had created prior to the pandemic. It's hard. I think it's really challenging. And so to your point, continuing to build great culture, I really think a lot of it comes down to the people that you hire and the kind of people that you hire. At ODAIA, we are optional in the office should we so choose. I personally go in once a week to hang out with the team, see how they're doing. And most of the leadership team pops in. We've got a lot of team members that are based in the US. So we try to get the teams together at least once or twice a quarter, a couple times a year for the entire company. I think that that's incredibly powerful. And then I think, again, being mission driven is one of the things that sort of binds everyone together and helping everybody understand what that is. The other thing that we do, and I can't take any credit for this. This is through Laura at ODAIA, but values recognition, I think, is incredibly powerful. We've got a channel, we call it a kudos channel. And the idea is that team members talk about what it is that they saw somebody do, and then they attribute it to a value. And I do think that that is beneficial. I think people get excited about that. The last thing I would actually add is that we had a customer who signed on over the weekend, and the product that they are launching, it literally will cure a disease. How often do you actually get in the drug business something that's going to cure a disease? It's really powerful to think about the fact that we could help get that drug into the hands of patients faster. And that's pretty motivating too. So it's sort of, how do you tie all those things together? It's definitely harder remote for sure.
Yeah, a couple key takeaways from me that I'll share, more broadly is the transition from what was before and what was after in this new environment is culture. You talked about borrowing from culture before. It needs to morph. And then you're seeing full circle now. Everybody, the streets are busy, the subways are busy again, which is nice to see, and everybody's coming, in their own schedule. One of the things that you talk about is the shout outs. I think there's a recognition element of things. People love doing what they do, not so much so they can get recognition. That's like sometimes a red herring, but they love the fact that sometimes other people notice what they did.
Yeah.
Uh, and I think that in a culture, if not abused, isn't a beautiful thing. It was like, because this is the stuff that's going on behind the stories in linear, behind the movements of contracts and the glue and the hard work that's stitching all of this together. I think there's a lot of special stuff in there. We should probably do a special episode on this because I think there's a lot of good topic fodder in there.
I think it's really powerful to your point, and it's not necessarily recognition. Everyone's motivated differently intrinsically, right? So sometimes it's recognition, but sometimes it's just being appreciated. People just like to know that that someone is appreciating what they're doing. To your point, it's a different kind of recognition. It's like that their effort is being appreciated and recognized, and I think that that's incredibly powerful as well.
You talked about business partner in one of the other, groups inside of ODAIA, and I really feel like when you look at it as a partnership of really moving the company forward, the leadership always has different positions, different players, right? One setting out the vision, one executing the vision, one managing the processes. Sometimes different hats worn by the same person. Um, Maybe talk a bit about like opposing characteristics that are really important for leadership. I'll give you an example. I ended up doing one of these, like, I'll call it warm and fuzzy tests years ago. And it was very interesting. It was one that kind of scored you on orthogonal things. So, for example, it tested your ability to, be innovative and kind of, go out there and just go learn and do the thing. And in the same axis, it also scored you on your ability to follow a process. And I felt very interesting because these were totally opposing mindsets in the same chart. I was like, oh, this is really interesting because around the table of your leadership team, you have all of these different opposing and sometimes same direction. What are some of the key things you've seen in the past that get people on the same page, get people on board? Um, and I'll kind of start with everybody's allowed to have an opinion, on a decision, and we should weigh them all in, but at the end everybody needs to be okay with the outcome because the outcome's happening, right? And that's been one of the things that I've just noticed over time. Maybe share some of the wisdom you've gained on this over the years.
I love that. And I love that you did the exercise. I think those are incredibly powerful exercises to do as a leadership team because I think it makes people realize that maybe the thing that they got frustrated with other counterparts is just because that's their strength and that you may not have that strength. And that's what makes you a great team. And those are complementary skill sets. So I love that you did that. I think that those are really powerful. They're some of my favorite exercises to do. So I love that you did that. Secondly,
I'll
yeah,
just interject there. Shame on me. I should have done it earlier. I would have probably just not looked at the results earlier in life. And the most telling thing from this thing was not so much like you kind of know by this age where you're good and great, but when it told you that you need work on, and then the ones where it's like you just don't have it, and that was the toughest one to swallow. You're like, oh, I have this. No, you don't.
but so that's part one. And I love that. And good for you. But part two is actually sharing it with your colleagues. Because when you share it with your colleagues, then you realize how you have complementary skill sets. So to your point, there are people who are strategists or they're innovators and there are people that are operators. And not everyone who's a strategist is an operator. Not everyone who's a visionary is an operator. But if you have only a team of visionaries and only a team of strategists, nothing will get done. If you have only a team of operators, nothing will move. Things won't change, right? So you have to have complementary skill sets. And so I think it's really powerful to share those kinds of things with your team. And then you said, so that it does mean though that as a leadership team, you've got opposing skill sets and opposing strengths. I think that it makes conversation easier and better if you understand that someone else has a strength, and it's probably worth listening to what it is that they have to say because it's probably going to add value. And then the second piece of it that I learned this from a colleague at Wave, he said, disagree and commit. It is one of the most important, I think, and powerful phrases. Disagree and commit. Just move on. Like you can disagree in the meeting, especially in a leadership team meeting. That is the place where you do it. But as a leader, when you leave that room, you were all marching in the same direction. You were on the same page because any kind of disagreement that you allow to permeate the organization is just toxic for the rest of the org.
It's that rust that builds up over time for people, and then at some point it just breaks, right? And there's very little training people get early in their career on this, and it's kind of something they have to wind and navigate. You can get formal training on it, but if you don't recognize the situations over time, it's hard, right? And especially in early stage startups where decisions usually have a very long half-life on a strategic level and a very short half-life on some of the execution steps, right? Like I think it's one of these, like you got to have two time frames moving in your head at the same time.
Yeah, I 100% agree with that. Totally agree.
You've been through some great acquisitions. I think there's one of the things that you've probably seen over time now that's very insightful is the founder mindset. Some would say, oh, they're just, wild, wild west, do anything at any cost. And it's like, I always say, actually, you know what? It's very calculated risk that people end up taking, but maybe share some insights of things you've seen, learned, and how you've been able to augment, take over some situations or provide input that's been the right dose at the right time.
Oh, really interesting question. So first of all, I think founders are all very different, just like every human is very different. There are some that are wild, wild west, and there are some that are very thoughtful and very strategic as they go through their thought processes and make decisions. So I personally see my role as to be a really good sounding board for those decisions and a thought partner. That's the business partner element, especially on the founder side. And it can be from anything from whether or not, and I've seen this before too, where there might be a founder who is specifically targeted on a specific exit, and so when the investors always say like, what's your hopeful outcome here? Is it an IPO? Is it an exit, to a sale to a strategic? What do you want? And I personally think that I do agree that there are certain founders who 1 or 2% who can target a specific outcome and go after it. And that's the right thing to do. I do think though that most founders are smarter to, I think the 98%, I'd love your input on this, Amar, but I think there's 98%. It makes more sense to keep all options open, and revenue solves all problems. And so you kind of go down that path and make sure that you keep your options open, because you really don't know what the world's going to look like. We've just seen what's happened with AI in the past couple of years.
Yeah, the optionality game has always been one of the key. Keep your doors open, keep two-way doors, all those things. And now you see AI coming, and if you're not leveraging it to what you can do next, I feel like you're picking up coins in front of the steamroller. Like it's one of these
100%.
interesting opportunities.
People need to be moving really fast right now.
Yeah. Speaking of fast, so sometimes people get this like growth at all costs, win at all costs, lots of challenges, lots of things to unpack in there, but maybe kind of how do you see people shifting from the, we've gotten through this part of the growth curve and we're now on a upward to the right with a slope. The best companies I've seen have never really cared at the slope of the curve. They just kind of increasingly want to increase the slope from, small, big, exponential. What are some of the things people can keep in mind when they're making decisions on this? Because sometimes I've seen people switch. They're like, oh, I never imagined the business to be this good. And they start managing for an outcome or something. And I'm like, guys, like what got you here was your mindset of this. So maybe there's an example that you can use from your past or an existing stuff that outlines that.
So first of all, great question. I'm not a fan of growth at all costs. I don't think I've ever really been a fan of growth at all costs. I don't think any CFO is a fan of growth at all costs. I don't think it makes sense. I think that smart resource allocation is really where it's at. I think that the market has definitely moved more towards smart resource allocation. And so I think if you have a good thought partner, you can figure out where to allocate your resources. And I think founders are actually quite good at it. They're very good at having a gut response to where it is they should invest their dollars, if they've got someone beside them that makes them make sure that they have that thought process going on. Whereas it's a lot easier to have a conversation with your CTO who says, I need to hire 14 people in this area. The founder's like, that sounds like a great idea. And then being the person on the other, let's go. And maybe the right idea is actually for me to sit there with founder and say, hey, let's think this through. Is this really what you want to do? Remember that there are trade-offs here. I think people overthink that just being thoughtful is not the same thing as you don't have to spend weeks thinking about it. You can still be very thoughtful in a conversation. You weigh the pros and the cons, you spend 30 minutes talking about it, and you can make a very thoughtful conversation. Because most of these businesses are small enough that the founders have incredible insight into what's going on in their business, and so can make very fast decisions. Sometimes it's just not doing it based on the hype of the person who happens to be advocating for what it is that they want in their team. And sometimes it's nice to have another sounding board. But it doesn't mean that my job is not to be the no police. The head of HR's job is not to be the no police. It's just meant to be the let's think about it and make sure that we're making the decision you will not regret making 6 months down the road.
I think it's the no regret policy, right? It's the, should have done that, right? Like everybody's had one of those in their life. And it's like, minimizing those can be very helpful in the probability of success has kind of been one of my things
I
as
love
well.
that.
So
Yeah, I agree with that.
before we get into the rapid fire section, this is always one where I like these talks try and find people in moments or stages of their journey and hopefully give them some insight. And I think, one of the things people put their mind on when they start is, they look at this revenue, however you want to calculate it, right? We've been through a few ways, but they kind of see 0 to million, 10 million, 100 million, you just start getting into different scales to the billion and then you're in different buckets. But what should people obsess over at 0, 1, 10, 100, outside of just like looking at the bank balance every day? I'll give you an example. Like in zero to one for me has always been like, you know, if you're not obsessed on building the thing that you think everybody should have, and they're like, that sounds so amazing. If you can build it, I'll use it. I'm always like, oh, keep working on that, right? And that could be, we're gonna give you a 10x more energy to build a data center. We're gonna make your life 10x better in this or 100x better in this capability. We're gonna cure a drug or a drug to cure a disease. Like there's always just some zero like hypothesis. You're like, wow, this is amazing. When they get to one, it's like, okay, did you get to one because one person bought into it, or there's a repeatability to it? That's been kind of some of the stuff that I've just been thinking through myself and in life on like 0, 1, 10, 100. And then when you get to 10, you're like, okay, people like this, right? And maybe in there's something here. What are some of the things that you've seen be successful in maybe the 1 to 10 or the 10 to 100 where people are just like, I wasn't thinking about it that way?
So those are great examples. As you were talking, one of the things that I think about is that building a business is really hard. And if you're not obsessed with solving the problem, I wouldn't bother. I think that you're probably part of Next 36, Next Canada. And so whenever you do those interviews, the first thing that I look for is grit and perseverance because it is really hard. And you look at whether or not does the founder have a chip on their shoulder. I'm sure there are a lot of theories out there amongst the investors about who make the best founders. And I think that like the 0 to 1 phase is definitely hard. Only so many businesses actually make it through that phase. But remember that once you get to 1, you need to celebrate it. 2, celebrate that's a milestone. When you get to 10, celebrate that milestone. And then 2 is that you're not done yet. So just keep in mind that once you've gone through all of those, it still keeps going. And so you got to be in it for the ride. So you got to be solving a problem that you're really excited about solving.
I love that. I think people get enamored by getting into a thing where they can get funded and go work on a problem that somebody else is or the whole domain is working on, and you see it in some of these accelerators, like 6 days in or 6 hours in, they're like, 6 weeks in, they're like, okay, and then like 6 months later, you're like, yeah, I wasn't so interested in that. And it's like, okay, well, that's a good learning journey, but learn from that and understand it. And then you see the ones where they're like, I'm going to replace my former self in my previous career. It was a horrible journey. It can all be done like this, this, this. And you're like, oh, okay, very cool. And they kind of just go after it, or they have a personal journey of somebody in my family had this thing. And I just love seeing those journeys.
Me too. And in fact, Wave was a good example of that. Both of the founders had tried to build small businesses themselves before Wave, and the accounting invoicing process was horrible. And they didn't want anybody to have to experience what they went through. And so they built a product that was incredibly easy to use for people who didn't understand accounting. And that was their passion. And they were really passionate about solving small business owner problems. And they continue to be. Same with Shopify is that way too. Making it easier. I mean, they went upscale, but it's a similar thing.
I remember meeting Kirk Simpson, one of the founders of Wave early on, and he was like, I know you have it. I go, what are you talking about? He goes, I know it's in here. It's somewhere. I just don't know where. I'm like, I'm sitting in my office. He's like, the box. And I'm like, oh, he's talking about the box of receipts.
Right. True.
Yeah, that was quite a great conversation. We've been friends ever since. All right, couple quick things before we get into the rapid fire. One other item I'll add in here: mentorship.
Yeah.
We all get somewhere with the help and guidance from others around us. I don't necessarily think it's above us or below us. I think it's around us in context of things. maybe talk about, one or two experiences from mentorship that you've either been given or provided and kind of share with the group.
First of all, I am incredibly grateful for all of the mentors and mentees that have been in my life because I've learned something from all of them. I am really fortunate that some of my best friends are tech CHROs, tech CMOs. So we end up with mentor mentee conversations at our, Saturday dinners over a bottle of wine on a fairly frequent basis. And I'm really grateful for that. I'm a very big believer in surrounding yourself with people who you can help and can help you, especially if you want to pursue a career. So founders specifically, I think founders should be surrounded by other founders. I think that's really important. I think that to your point about mentees or above, below, and it doesn't really matter. A good girlfriend of mine is someone who was more junior than me at Wave. I think she's awesome. And every time I talk to her, I feel like I've learned something new about how to be resilient, how to navigate stuff in a career, how to handle hard problems, whether they're people related or just work dynamic. And so I think you can learn from anybody. But I do think it's really important to be really intentional about your mentor relationships and your mentee relationships. And those of us who are mentees need to be intentional about finding mentors. And I really think that people should have mentors or an advisory council, as some people will call it.
Yeah, I think people see this or hear it from others like, oh, I have like my own advisory group or my own board, and they're like, oh, that feels very. I'm like, call it what you want. You kind of need the peer group, the special situations experts that are different phases of life, and I think it's really important to have that.
Yeah, I agree with you.
Into the rapid fire. Red or white?
White.
White. Favorite book?
Most recently, The Women, Kristen Hanna, amazing.
Favorite movie?
Good Will Hunting. Those one-liners are awesome.
Best piece of advice you've ever received?
Careers are long. Don't make rash decisions.
Favorite way to enjoy time outside when you're not doing what you do here?
CrossFit.
Ooh. Okay, let's break down a couple of those. I found some really interesting answers. Talk a bit about the book.
So The Women is about nurses in Vietnam. And so as a female in tech, I am not always one of many females in the room. And I find it incredibly powerful and motivating to realize how far the world has come in the past 40 years. If I had lived in the US in the 70s, I couldn't have gotten a mortgage on my own. So I think we always forget how far we've come. So if I'm ever frustrated, I read historical fiction and realize how far we've come, and it makes me feel a lot better. The Women is a great book. I highly recommend it.
Got it. I love that. Best quote from Good Will Hunting?
How do you like them apples? Who
So
doesn't
he
love that line?
sticks the paper right up against the glass, right?
Yeah.
It's a good one. And then on CrossFit, let's talk about CrossFit for a few minutes. So obviously, CrossFit swept the world a while ago and is incredible. I don't do it, but everybody who does it's part of this incredibly tight network of CrossFitters. I think I don't know if you're doing it with Mark McLeod.
No, but he and I talked
but
about it.
he just talked about it, and I think he may be moving on from. But like it's just such an incredible community, and everybody you meet there is incredibly fit. So maybe break it down.
So just to be clear, I think CrossFit is way more accessible and not everybody is incredibly fit. I'm a scaled CrossFit athlete. I still consider myself a CrossFit athlete. And I think that if people realized how accessible it is, more people would do it. Every class you go into, it's every workout of the day has a level 1, level 2, level 3, and you pick whichever piece of that you think you can do. I personally like the idea of being so exhausted at the end of my 10-minute, 15, 25-minute workout that I lie on the floor and just breathe. It is incredibly de-stressing to put that much effort into a session. I think the community is awesome. I am fitter, stronger, faster, probably not faster. The older I get, the slower I get, but I'm definitely a lot fitter than I have been in the past 30 years, probably 25 years. Yeah, I love it.
Amazing.
Big fan.
I think there's also a mental clarity and focus that comes through some of this
100%.
that's incredibly powerful.
Yeah, I sleep better at
And
night. They talk about like if you actually lift and you lift something that you've not lifted before, say if my first 250-pound deadlift, that was an awesome moment. I slept really well that night because the moment that you do that is that you actually reset your nervous system. And so you sleep really hard. And so that's where adaptation comes from. And especially as a female in my mid 40s, I think lifting heavy doesn't have to be super heavy, but lifting heavy, I think is incredibly important. We lose muscle mass. Guys do too.
for sure, I think the trend of folks in this decade where they're fitter than they were the previous decade is a really good one.
Yeah, I think it is too. I think people now understand what it takes to be healthy. I think there was just I think people accepted the idea that they had to get older and they had to age and just age
Mhm.
gracefully. And it's not like I'm bulking that trend. I just want to be able to, you know, get up off the floor when I'm 90 and not have to think about someone else helping me do it.
Awesome. Well, thank you so much, Rebecca. This has been awesome to spend the time and appreciate you sharing your insights with the community.
Thank you for having me. I appreciate it, Amr. Good to chat with you.